Hello, everyone. This is Kathy McBreen of the Spectrum Group. Thank you so much for coming to our webcast today. We want to update you on two things. First, we're going to talk about our Investor Confidence Index. And then the second part of the webinar, we're going to talk a little bit about one of our new reports coming out about how to effectively communicate with wealthy investors. So that's what we're here to talk about today. As I mentioned, I'm Kathy McBreen. I'm the Managing Director of the Spectrum Group, and I'm going to be introducing you to George Walper, our President. George?
Hello, Kathy. Thank you. How are you?
Great, thanks.
So the index this month is quite interesting. We typically see some parallel activity between the wealthier part of this index, which we call the Millionaire Index, compared to the General Affluent Index. The Millionaire Index, just as a refresher, is for individuals with $1 million of net worth and greater. The Affluent Index is for $500,000 and greater. Typically, we see a spread where millionaires are far more optimistic than the overall affluent population. This month, and we'll see that here in a second, the spread has essentially dropped to 1 point, which is quite narrow. It's the only second time since January that that's the case, and one of the few times in the 14 years that we've been doing this index that we see this. The other interesting thing about this index this month is that both of our affluent and millionaire numbers, as you can see here, are trending downward compared to both last month, 7 points for millionaire and 3 points for the affluent index, and compared to a year ago, 9 and 2 points respectively. What's interesting about that is that the overall consumer confidence index, which tends to, from a statistical standpoint, be the investors or the Main Street American investors below these two indices, are actually far more optimistic this month. And so we see in our data that wealthy Americans are becoming much more cautious, and as you'll see, much more concerned about the election in general and the impact it will have on them. Here's where you can see, when you just look at the top chart for a second, the drop in the bluish purple line from 12 to 5, which is the Millionaire Index, and the affluent population dropping from 7 to 4. You see that 1 point difference, and you go back to earlier in the year where it was a -3 to -4. Prior to that time, you have to go back a few years where you see these two groups of wealthy Americans having the same level of attitudes, concerns, etc. You look at the bottom chart here, you see what I always call the roller coaster, but you always see the purple or blue somewhat above the orange. So that's quite interesting that the wealthier Americans are starting to be a little bit more pessimistic about what's happening in their overall life financially. Some of you may recall, who have seen our index over the years, we think one of the bigger drivers of how people are feeling about things is a number of our subcomponents where they describe their overall household in terms of a number of factors, assets, their projections about household income, etc. You can see we were doing a little bit better here earlier in the year. July was an increase from June. Last month was flat, but now we've dropped again to back to where it was in April, second quarter. So you see that there is some concerns overall in terms of trends. The overall component, as you saw in the last chart, dropped 3.4 points. Household income is down. The economy is up, and we're going to see that. That's been throughout this year a very interesting category relative to people's political affiliation, and we'll see the significant difference relative to how folks identify their political affiliation. Folks' overall perspective of their employer or company they own, if they're a business owner, and overall household assets, all trending down, except for the economy up just a little bit, and all trending down from last year except their overall household income. So these are very inconsistent, or we would call potential concerns relative to going forward over the next few months. As I touched upon, this year, every month, we actually are looking at folks' political affiliation relative to drivers of our various components of the index. And you can see Republican, Democrat, and Independent, and in each one of these categories, a fairly significant difference. The most significant difference being their outlook on where the economy will be going forward, where Republicans are very pessimistic, Democrats are very optimistic, and Independents are right in the middle. This category throughout the year has shown the biggest disparity among parties. You see household income, there is differences, but it's not as severe. The same with overall company health. And their overall household assets, interestingly enough, are actually, somewhat similar, given that you would expect that would be difference given their pretty significant difference on their outlook about the economy. The most serious threat that they identify currently to achieving their household goals is the political environment. We see this every political national campaign, Senate contest, every 2 years for Congress, House of Representatives, but more importantly, every 4 years with presidential elections, where you see the political climate is by far the most critical element of their achieving their household goals. Not surprising. Here you see the same factors looking at a quarterly basis throughout the last 6 quarters, and political climate, which steadily goes along the way at about 14%, jumps up dramatically this month, outshadowing or shadowing market conditions and the economy as a whole. And when you think about the economy, when you think about household outlook, the economy was very high there, but not anywhere near the political affiliation. I'm sorry, the serious threats to their household goals. We think another important component, especially for those of you advising clients, those of you advising wealthy Americans, this is how they describe their preference to invest money for the next 6 months. And we think it's important to look at the trend as much as the most recent 30 days. And so you see equities on the left side, which had a nice uptick last month. In the last couple of months, is pretty significant decrease for 1 month. Fixed income, mutual fund fixed income or bonds had a slight tick upward, or most flat. Last month was upward, where this month individual bonds dropped. But more importantly, you see cash as a potential has remained flat, and real estate is starting to drive back upward again. But this is what clients feel, think, react. This is also what they like to talk to their advisor about, because this is what they think they should be investing in. And if advisors have a different thought on that, this is a nice conversation to have. The same thing from a investment preferences split up by their political affiliation. You can see are some differences between equities, fixed income, cash, short term, and then the category at the end, not investing, where you see that in each asset class there is differences, some more severe than others, but a different attitude towards equities going forward with Republicans versus Democrats, similarly around their cash overall positions, and those all thinking they should be on the sideline for a while. So that's a little overview of our index, and as Kathy will tell you at the end, our index is released the first of every month, and it's always part of our high net worth advisor newsletter, which is geared towards advisors. Kathy's going to talk a little bit about a study that we are just finishing that we think is interesting. It's how wealthy investors would like to communicate with their advisor or their provider, so their investment provider or advisor. Series of research we did throughout the last 3 or 4 months, and I'll turn it over to Kathy.
Hi, thank you, George. Our effective communication report, which is due to be released next week, really involves 2 different types of research. We did some qualitative data. We did focus groups with groups of baby boomers and groups of millennials and Gen Xers in 3 different parts of the country. We did some on the East Coast, we did some in the West, and we did some in the Midwest. And we really were trying to, what we did is we're combining that with our quantitative information that we do on a monthly basis. So we have over 1,500 households that we also ask questions to about how they want to be communicated to with their advisor. The goal of the research was really to gain an understanding of how do they really want to talk to their advisor? What do they want to talk about? What appeals to them? Are there certain words or phrases that they're really interested in, or that really make them find an advisor more compelling to them or more interesting to them, or they'd be more likely to listen to an advisor because of that. It was quite interesting because we found some really large differences, not just because of age, which we anticipated, but also because of areas of the country. And in some cases, it's just a personality thing, or that's probably the largest factor, is the personality of the individual. So the first thing that I would like to have you take a look at is this page where we talked about how do you feel about the communications that you're getting from your advisor right now? As most of you know, a lot of investors will get newsletters, they'll have face-to-face meetings, they'll talk to the senior people, they'll read blogs, all of these different kinds of things. What we found was people are generally satisfied with their face-to-face meetings. There are some differences based upon age, et cetera, but they're generally happy with the face-to-face meetings they have, as well as the number of face-to-face meetings they have with an advisor. And they're generally happy with the access to firm management. And what that generally means is, you might go in to see your advisor and he might bring the head of the office in to say hi or to take you to lunch with him or whatever. The things that really required some improvement have changed in recent years. And one of the things I'd like to address are newsletters. We used to get terrible comments about newsletters, but those have improved lately because I think that investors have accepted the fact that they believe that these newsletters really are, in some cases, monitoring products or just kind of pushing products. But I also think that the quality of some of the newsletters has improved. What they really are interested in are more blogs and more social media types of information from their advisors. And this is particularly true of millionaire investors who overall tend to have a younger age. So they like to go online. They like to read something directly from their own advisor or something from their advisor that he's recommended, whether it be through a blog or maybe even some of them who are on Twitter and might have a link to something. So you see those types of individuals becoming more, they're becoming more and more of them, and they're becoming more interested in reading this type of information. The following are some quotes from the focus groups. And as you can see on the left, the first one is pretty representative of how they described what they did. So most of them said they met 3 or 4 times a year with their advisors, and they really like talking about, what they wanted in retirement, what their kids are doing. So really showing a personal relationship. So that was pretty, for most of the investors that we talked to, having a personal relationship was really important. And I would say some of them was almost a deep friendship as opposed to just a client, advisor kind of relationship. There are a few that really didn't like that kind of an idea, but I would say for the most part, they want a warm, cordial kind of relationship. As you can see at the top of the next one of the investors was describing, he doesn't really like to meet that much with the advisors that much. He said that different personality. He said the old guard was much more personal, meeting some of the older advisors, but now that they've retired, he kind of likes the idea that some of these younger people are pretty professional and kind of get to the point. The bottom comment is really about how were they attracted to an advisor? And surprisingly, more people actually go to some of the, especially the older retired folks, or the older baby boomers, I would call them, had actually gone to a lot of presentations where they would later on call up that advisor and ultimately end up being one of their clients. But it wasn't an immediate thing. It's like something they went to see this guy speak at a seminar 2 or 3 years ago, but they kept the materials, et cetera. So despite the fact that a lot of times advisors might find those not useful, they actually are in the long term. What do they like to, how often do they like to talk to their advisor? And as you can see, for the most part, most individuals really like to speak to their advisor at least quarterly. Some want to speak to them monthly. A few want to talk to them weekly, and then there's just a handful that never want to talk to them. And they like the fact that they actually reach out to them. So the fact that somebody would reach out once a quarter to them was a very positive thing. It's obviously very critical that they're always accessible or always call you back. And that was absolutely, they have to call me back. That's just not even something that I would ever question. How do they like to communicate? Do they like to communicate via voice? Do they like to actually talk face-to-face? Well, face-to-face was the most popular way to communicate with their advisor. However, you can see that a lot of them like to talk on the phone. Some of them like to text, and some of them like to email, but those numbers are generally smaller than the face-to-face meetings. So as you can see, there are some differences by those who are ultra high net worth being investors with more than $5 million, and millionaire investors are those with $1 to $5 million. The voice monthly, a lot of them spoke on the phone monthly. Some of them communicate by text monthly. Some of them communicate by email. And as you can see, the ultra high net worth investors were more likely to communicate by email than the millionaire investors. But overall, they don't communicate via text, phone, or email all that frequently. A lot of times, like I mentioned before, they like having their twice a year kind of face-to-face meetings, and that was quite interesting. That was one of the most important things we learned. The other thing that we learned, which was interesting, was that as investors start to become more global or travel more, they're more than happy to jump on their computer and talk to their advisor face-to-face via Skype or FaceTime or one of those types of services. We expected people to be a little hesitant about it, but for the most part, almost everyone was willing to do it. But they mostly preferred having to do it via their PC or their Mac. A lot of it had to do with the age of some of the investors. They preferred to be able to have a big screen so they could see, and they're comfortable doing it because they have grandchildren that they talk to in this capacity. But the PC or the Mac was much preferred over the smartphones because in a lot of cases those weren't seen as being as reliable or as good quality, or the screen size, but that also was based somewhat on age as well. And the tablets and e-readers fell right in the middle there. So those are just some of the key highlights that you'll see in this report if you're interested in it. Like I said, it'll be available next week.
I have one other comment from an interesting element of the focus groups in the West Coast relative with millennials and baby boomers relative to things like how often do you want to receive hard copy statements, or how often do you want to receive newsletters electronically. And it was quite interesting, given that age group, the younger folks that we included in this research, that the younger folks very definitely like to receive hard copy statements monthly.
But they still want it available online.
Yes, they want it available online, and they also were very comfortable getting newsletters online or investment research, booklets online, but were very clear that they wanted their statements hard copy in addition to having them access online. They really felt the need to look at the statements and verify. It was very interesting because it wasn't just one person, it was the entire group, two groups on the West Coast. So we make a lot of assumptions with younger investors that they want nothing on paper. So that was quite interesting.
Great. So I'm going to turn it back to George, and he's going to briefly wrap up talking a little bit about some of our newsletters, et cetera, that we have available.
So as I mentioned earlier, each month the index, which has far more information than what we shared with you, is available in our high net worth insights newsletter, first of the month. This newsletter also gives you insights to some of our ongoing research. We chose the one today to talk about with effective communication. So it is something that we always encourage advisors or providers to think about. A number of our clients feel it's a great way to get a quick pulse about what's happening. You can see here in terms of the various topics this month that we just released today. So it's something to think about, and let us know if that's of interest to you. We thank you. If there are any questions, feel free. You can just type into your little chat box. We'd be happy to spend a little time here at the end and respond to them if you have any.
Or alternatively, you can email us directly, and we'll be happy to respond.
If you email us, either info@spectrem.com or gwalper@spectrem.com, it will find us, and we will be happy to respond. If there aren't any, we thank you very much, and we look forward to speaking with you again soon. Thank you.